All right, guys, this is not going to be so much a move of the day. You're looking at a 60-minute bar chart. I just want to cover the last day of the week, the last day of the month, and kind of what the new drivers are in the market. And another um, probably educational teaching moment. This morning, I ran into some technical problems before I started trading or even opening the room. And anytime you have something that you didn't expect, you're going to be aggravated. You're going to worry about what you missed. And then generally, once things get fixed, you might do something that's something that you wouldn't do if you didn't have those technical issues. Just like if you miss a real good trade, you tend to get anxious and make a dumb trade with the next decision. So you got to be cognizant of your subsequent decisions after you run into any kind of tech issues or missing trades or things like that. That happened to me this morning. And so what I want to do for this video to end the week is talk about the week. Talk about some things that hit the market that we weren't maybe expecting as much. Now, we've known U.S.-China trade has been the driver for several months now. And a few weeks ago, when it was apparent that the negotiations broke down, we got some downward pressure in stocks ever since that moment. We were trading in the 29, 30, 40 handle. We're down in the 27s. Other things, though, have hit as headwinds to global stock markets, including, let's just start this week. I never would have put these two words together until they came across the wires early in the week, and that was global or rare earth from China. China says that they're going to use that, in which they control 80% of the world's supply. They're going to use that in this trade war. So that, again, sent the market with a headwind and lower. Middle of the week, Mueller gave a statement. It wasn't terribly bearish if it was all alone, but it was just another straw to break the camel's back. It just created a more likelihood, higher probability that House Democrats will go forward with an impeachment. The market doesn't like it because it doesn't like uncertainty. Now, that's just a knee-jerk and maybe a smaller time frame rotation lower. However, when you stack it with everything else, it creates a much tougher chance or opportunity for markets to rally. So you had that midweek. And then coming into Friday's trade, Thursday night around 6:30 Central, and you've seen it with this move lower on this 60-minute bar. Trump said out of nowhere, they're going to start levying tariffs on Mexican imports in the United States, 5% starting on June 10th, and they're incrementally going to move that up to 25% by October 1st. This has nothing to do with trade negotiations. It has everything to do with immigration. They feel the Mexican government could do more for all the migrants coming up through Mexico from Central America, overwhelming the border. So not a lot of people thought or considered this as a tool that the Trump administration would use. They did. They had details around it, and you could see what it did. We've never recovered from it all the way through the rest of the session as we open up. Now, this is all later Thursday night. This is most of the overnight session. And then this is the day session. Didn't have a lot more downside, but it did close below where we opened on a pretty gap open lower type day. It didn't take back any of the slack. If you look at 60-minute consolidation boxes, you have one here. You can't tell me that the middle of these boxes, when they're pretty clear, are arbitrary. It came up there, used it as really good resistance. Middle of the day around 69.70 even. All right, this is the S&P June contract. Couple things to be aware of. We got rollover coming within the next 2 weeks in these equity markets. Treasuries have already rolled. I want people to start watching the Japanese yen and the 30-year bond or the bond market in this asset allocation environment that we've become into or that we're getting into. Bonds rally, stocks break, vice versa. Couple things that you now start paying attention to with new drivers that have jumped into the front seat, so to speak. What is the unwind of it? Maybe the House Democrats come with a switch saying a black and white comment, now we're not going to impeach, or we are. That could be either bearish or bullish depending on what that comment would be. You want it to be something that's pretty clear and just out of nowhere. Even to a higher degree with these Mexican tariffs, they don't start till June 10th. Does the Trump administration come off it? Does the Mexican government say we'll do more? Does the Mexican government say, hey, maybe we'll start tariffing some U.S. imports? Whatever. Does it get heated? Are there comments that you could take opportunity from if you're sitting in front of your screens when they hit the wire? That's what's important. If you're a trader and you want to be a professional trader, you have to know how to react and anticipate now these stories that could come down after some of the initial ones have jumped into the driver's seat. So this is important. That could be a market disruptor, 5%, 10%, 25%. It's not great for economic growth, so it could be a hurdle for economic growth. How much? Nobody knows. I'm not going to sit here and tell you, well, it could affect GDP and unemployment. Nobody knows that. The market will try to get their head around over the weekend how good, bad, or it doesn't matter because it's all fluff over the next few days, over the weekend and into next week. But as we start next week, when and if we get any subsequent comments that hit the wires, we used to call them tape bombs, you need to anticipate it, either good or bad. Mexico says, you know what, we could do this or that. Trump comes off of it, we'll get a knee-jerk rally. They come in a little hotter with comments, we'll get a knee-jerk sell-off, and you'll keep more pressure on these markets. The fact that they gapped lower in the open, which was around in here, tried to take up some slack, obviously met with some selling and closed lows of the week, lows of the month, and everything else, shows that these are real fundamental drivers that the market's worried about. So our job is to make sure we anticipate the unwind of some of these negative news events. What does that sound like? Who might say it? Is that a comment that's bullish or bearish? Things you can't think about if they hit. You have to know, anticipate, and diligently react to them, because I get a strong feeling we're gonna get them, whether it comes in a Trump tweet or an official comment out of Mexico, China. We got the G20 meeting later in June. Good things, bad things, something in the middle could come of it. But right now, there's pressures on stock markets, global stock markets, because of all this tariff talk for all different kinds of reasons. So I hope this was a decent summary of the week, but more importantly, preparing everyone for the weeks ahead. Have a nice, safe weekend. We'll see Trading Room guys on Monday.